Hundreds of small and regional banks across the U.S. are feeling stressed. More than 280 banks face the dual threat of commercial real estate loans and potential losses tied to higher interest rates.
There's no doubt in my mind there's going to be more bank failures.
Or at least dip below their minimum capital requirement.
There will be bank failures, but this is not the big banks.
Rapid interest rate hikes can mean borrowers suddenly face more expensive loan payments. And if they can't afford to pay up, they may default on their loans. A record $929 billion worth of loans are coming due, aka maturing, in 2024, driven by mass extensions of loans originally due in 2023. Regulators are...
So they've been kicking this can down the road. I knew it was something going on with all these distractions. I'm telling y'all, every time there's a major distractions like P. Diddy, the Kendricks, and the Drake competition with hip hop and all of that, right? And though that's very much so entertaining, right? Don't forget the purpose and the focus, right? The focus is to get the money. The focus is to live in abundance. And the focus is to liberate oneself, right? That's the focus. You wake up and you get up and you do what you want to do, right? Not what you're told to do. But it goes to show America really has a bad... I see why they didn't teach us financial literacy in school. It all makes sense now. This is why. If they would have taught us financial literacy in school, right, we would have figured this out way before them. We allowed them to figure it out. So y'all know these commercial buildings, right? Most of these commercial buildings, like these office spaces and these mega billion-dollar buildings, right? They took out a loan to get that building. They're not making profit in that building. People aren't even renting out office spaces anymore for their employees to go to work. They barely even want to put their employees to work. They ain't making enough money. Can we talk about it? Most of these people are filing for bankruptcies, including the bank. But it's funny, right? In the word bankruptcy, what is the root word? Put a 1 in the chat if it's bank. Put a 2 in the chat if you believe that it's disruption or interruption. Put a 3 in the chat if you don't know where I'm headed with this. I'm saying it all to say that nothing works without the bank, right? Or without you banking on yourself, right? So all banks are going to file bankruptcy except for the large ones. That's why the large ones to me are, like, it's called company acquisition. They're acquiring these small companies for their data, for their balance sheet, XYZ. That goes to show that it's over. That goes to show that it's over. They're using these commercial buildings now and they're trying to renovate them into apartments, right? Or they're using hotels now and try to make them apartments. Leave your thoughts down below. Let me know what you really think.
Working behind the scenes with potentially at-risk lenders.
They're issuing sort of confidential, under-the-radar reports saying you got to raise your capital.
We'll see a lot fewer bank failures than we would otherwise if we're successful in attracting private capital to recapitalize these banks.
These are banks that probably need to raise capital, or they can try
Pause. It all makes sense now. I see how America had a AAA rating score, right? Can anyone guess what ratings we have today? Put a 1 in the chat if you believe it's still a AAA. As a matter of fact, put 3 A's in the chat if you believe that it's a AAA. Put 2 A's in the chat if you believe that it downgraded some. Put 1 A if they fell off.
acquired by a stronger bank.
However, banking sector acquisitions have dwindled. These stressed banks could have big implications for the U.S. economy.
In 1 year since the collapse of Silicon Valley Bank,
Of course, we're seeing cracks form once again a year later.
Both major and regional bank indexes are still struggling since 2023's bank failures.
I think most of them are just fine, but confidence is everything in banking. People start losing confidence, and even the healthy banks can be adversely impacted.
Here's why hundreds of small banks may be at risk of failure, and how insolvency can be avoided. The U.S. has thousands of banks.
There are about 4,600 banks in the United States, but in most developed economies in the world, there aren't regional and community banks.
Approximately 4,000 banks in the US are small banks, also known as community banks.
But why do y'all think that exists in the United States then, these small banks, if most of them in other places are commercial banks? Why is that? Why is that? Leave your thoughts down below.
If you add up the collective assets of those 4,000 banks, small banks control roughly the same value of assets as America's largest bank, JP Morgan Chase, with $3.2 trillion of assets.
Now the stress is really moving to the community bank category, and those are between 1 and 10 billion in assets. The great bulk of the institutions that are going to be, facing this stress.
The Claros Group analyzed 4,000 banks, screening regulatory call report filings for banks with over 300% of capital in commercial real estate loans and potential losses tied to interest rates.
So I'm Brian Graham. I'm a founder and partner in the Claros Group. We thought it was important to focus on how they measured up on those two macroeconomic factors that are important.
282 U.S. banks are at risk, with nearly $900 billion in total assets. The majority of those banks are smaller lenders with less than $10 billion in assets each. 16 of those banks are larger, with anywhere from $10 to $100 billion in assets. There's only one bank with over $100 billion in assets.
One point of this analysis is to say, look, across the universe of 4,000 banks, where are the issues going to be? They are going to be in the middle to small size banks, which is by its nature less systemic. I think the issue is that a lot of these smaller banks support communities away from the coast. You're essentially hamstringing the economic development in those communities.
First of all, even if they're smaller banks, the communities, they're
I think this is the way to eliminate progress, because banks, right? They're in the business of wanting to have power. So if you have the commercial banks like the JP Morgans, the Bank of America, all these commercial banks, right? They're going to acquire all these other banks. It'll be in their best interest. I want to leave y'all with a fact though, right? And I'm gonna play a little bit more of this video, but I'm gonna leave a link down below. Time sensitive, I have somebody going about 30 minutes. So I gotta get ready for that. I've been doing videos this morning for another 2-3 hours, so it's time for me to head out and accomplish my other goals as well, right? So I'm noticing something with the banks though. See, to me, if the bigger companies are acquiring the smaller companies, and the smaller companies are the companies that's responsible for building out the community around the area, right? Then that goes to say, if you eliminate those banks, then you're actually messing up their estate, their developmental plans, which means that we're back to square one. It means we're back to square one. And like I see it like this. Y'all know about the BRIC nation, right? Brazil, Russia, China, India. Brazil, Russia, India, China, BRICS, right? S, Saudi Arabia, right? And there are plenty more other nations that decided to join. I think money itself is changing, right? And you can tell that it's changing. It's changing so much that the banks itself are becoming insolvent. But I wanted to give y'all this insight right here. The other day I was doing a little bit of charting, right? Because I trade and I like to do my homework on these companies. So I was very interested in Bank of America for some reason, because it's the Bank of America, right? And then I figured out something. And I said, these banks are not really into the business of simply just banking. See, these banks, Bank of America, I discovered that Bank of America was actually in the business of life insurance. Bank of America owns more life insurance than any other bank in the world. Let me repeat. So you thinking that they're playing the banking game, right? They're not. They're playing the dead man's game. The life insurance game. The game that no one taught us. That's the game that they're playing. The game that you must learn if you want to succeed and bank on yourself and become a big bank. It's the reason why those community banks still own the same amount of assets as those regular banks, because they decided to bank on themselves. So I say, aha, Warren Buffett, smart guy. Why is he doubling down on Bank of America? Bank of America has the most life insurance policies in the world. I see why when you put your money in Bank of America and all these banks, they don't give a hell about what they want to give you. They're giving you 0 to nothing because you don't get it. You could have took out a policy on your own self, and you could have cut out the middleman, which is the bank, and then you have it right there. So I said, oh, they playing them type of games. Bank of America. You gotta learn. That's why education is so important. But the right education. That's why I say I cross out school, but the right education is important. Right? You can't walk around here not knowing anything. That's not gonna work. You know? So pay close attention. Learn the life insurance game so you can replace these banks as much as they plan on replacing you. Become your own bank. Bank on yourself. Invest in yourself. Not financial advice. It's just my thoughts on this. If there's a problem, let's come up with a solution. Why don't we? Why don't we? In life, you're going to have plenty of problems every day. It doesn't matter. Just solve them. Solve them to the best of your ability and make sure they get solved. If you don't know how to solve them yourself, find someone that knows how to solve them for you. Critically think, because as long as you get it done, it's done. How people say how you got it done, that's the details. That's field discretion. That's on them to believe that. But let's continue.
Rely on them, certainly care about them.
The U.S. has about 130 banks that are considered regional banks.
130.
And collectively, they control just under $3.1 trillion in assets.
Okay.
The larger regional banks, they're a really important source of credit for smaller and medium-sized businesses, local governments, nonprofits.
Without regional lenders, more businesses may have to turn to big banks for services that may be more expensive and less personable, and they may not like their options.
They provide competition for the really large, mega banks, the multi-trillion-dollar banks, which is good.
For individuals, the consequences of small bank failures are more indirect.
I think we have a very stressed banking system, but the
I
vast
believe-
majority of those banks aren't.
Do you guys agree on that? Ladies and gentlemen, do you agree that America has a very stressed banking system? You could tell because the banking system actually worked, right? I'm talking about work and the benefit of the whole, not just the benefit of a group of people, but the benefit both class of people so we can uplift and grow, right? I don't believe that they will be giving you 0 to nothing on your own money that you're putting in their bank. It means that they really don't need you, or they know something that you don't know. And 9 times out of 10 is what you don't know that's keeping you where you at right now.
Insolvent or even close to insolvent. They're just stressed. Doesn't mean that communities and customers don't get hurt by that stress. The natural reactions to not invest in the next branch or technological innovation or make the next hire. It just hurts a community in a different way, and it hurts it more kind of subtly and gradually and over time than a bank failure.
Directly, it's no consequence if they're below the insured deposit limits, which are quite high now, $250,000.
That means if a bank insured by the Federal Deposit Insurance Corporation, also known as the FDIC, goes under, all depositors will be paid up to at least $250,000 per individual, per bank, per ownership category.
FDIC's.
But why? Why do that, right? This is not financial advice. Just only thing you need as a bank to me is 6 months of emergency fund. That's it. Your accessible thing, your day-to-day. As far as savings, never use a bank as a savings account. There's no point. You got the other higher yield savings account that print out 5% every year. That's much better than leaving your money in a bank that's getting 0.001%, not even a percentage, and then with 1%. What? This is what you do with that $250,000. Go dump it in a life insurance policy. Let it gain compound interest for X amount of years. And you can thank me later after that. Au revoir. Next.
Really got a strong record on this, so people should not worry.
The U.S. has the largest commercial property market globally, and banks underwrite the majority of commercial real estate loans. If you think about the banking industry overall, there are 4 basic types of loans: consumer loans, C&I loans, which are essentially loans to companies, residential mortgage loans, and commercial real estate loans.
Regional and smaller banks have always tended to have higher concentrations of commercial real estate.
Is less that they just made a bad decision and jumped into commercial real estate with both feet. And it's more that they just don't have the scale to compete with the larger banks in the country in consumer lending or in residential mortgage or in commercial and industrial lending. And that leaves them with a higher concentration and exposure to commercial real estate.
The markets in general are poking the banks on their exposures. How are they being managed? What are some of the stresses that they're thinking about? And probably most importantly, how are they reserving for those potentials?
When the Federal Reserve raises rates, commercial real estate loan payments become more expensive for borrowers. If borrowers can't afford payments, they may default on their loans.
Federal Reserve Chairman Jerome Powell has candidly said, look, there are...
So basically, the Fed is going to default on their loan. Y'all really think that's going to happen when the Fed is the one printing the money? Come on now, wake up and smell the coffee. Everyone's gaming on. On that note, peace, blessings, and love. Don't let this thing put fear in you. Just keep focused on your goals, right? Keep focusing on your purpose, and that's all you need to do. Still be aware of what's going on, so it might trigger your portfolio here and there, but focus and remain vigilant. On that note, peace, blessings, and love. Smash that like button. I'm gonna leave the link down below so you can see the entirety of this video. It's about a 15-16 minute video. Like I say, I'm a little bit time sensitive right now, so let's go. Remain strong.